Fund accounting is an accounting system for recording resources whose use has been limited by the donor, grant authority, governing agency, or other individuals or organizations or by law. 1-2. It emphasizes accountability rather than profitability, and is used by non-profit organizations and by governments. In this method, a fund consists of a self-balancing set of accounts and each are reported as either unrestricted, temporarily restricted or permanently restricted based on the provider-imposed restrictions. 1. The label fund accounting has also been applied to investment accounting, portfolio accounting or securities accounting, all synonyms describing the process of accounting for a portfolio of investments such as securities, commodities and/or real estate held in an investment fund such as a mutual fund or hedge fund. 3-4. Investment accounting, however, is a different system, unrelated to government and non-profit fund accounting. Non-profit organizations and government agencies have special requirements to show, in financial statements and reports, how money is spent, rather than how much profit was earned. Unlike profit-oriented businesses, which use a single set of self-balancing accounts, or general ledger, non-profits can have more than one general ledger, or fund, depending on their financial reporting requirements. 5. An accountant for such an entity must be able to produce reports detailing the expenditures and revenues for each of the organization's individual funds, and reports that summarize the organization's financial activities across all of its funds. 6-7. Fund accounting distinguishes between two primary classes of fund. 1-8, those funds that have an unrestricted use, that can be spent for any purposes by the organization, and those that have a restricted use. The reason for the restriction can be for a number of different reasons. Examples include legal requirements, where the monies can only be lawfully used for a specific purpose, or a restriction imposed by the donor or provider. These donor/provider restrictions are usually communicated in writing and may be found in the terms of an agreement, government grant, will or gift. 8. When using the fund accounting method, an organization is able to therefore separate the financial resources between those immediately available for ongoing operations and those intended for a donor-specified reason. This also provides an audit trail that all monies have been spent for their intended purpose and thereby released from the restriction. 1. An example may be a local school system in the United States. It receives a grant from its local state government to support a new special education initiative, another grant from the federal government for a school lunch program, and an annuity to award teachers working on research projects. At periodic intervals, the school system needs to generate a report to the state about the special education program, a report to a federal agency about the school lunch program, and a report to another authority about the research program. Each of these programs has its own unique reporting requirements, so the school system needs a method to separately identify the related revenues and expenditures. This is done by establishing separate funds, each with its own chart of accounts. Non-profit organizations' finances are broken into two primary categories, unrestricted and restricted funds. 8. The number of funds in each category can change over time and are determined by the restrictions and reporting requirements by donors, board, or fund providers. 9. Unrestricted funds are, as their name suggests, unrestricted, and therefore organizations don't necessarily need more than a single general fund. However, many larger organizations use several to help them account for the unrestricted resources. Unrestricted funds may include. Restricted funds may include. Like profit-making organizations, nonprofits and governments will produce consolidated financial statements. These are generated in line with the reporting requirements in the country they are based, or if they are large enough they may produce them under International Financial Reporting Standards, IFRS. An example of this is the UK-based charity Oxfam. 10. If the organization is small, it may use a cash basis accounting, but larger ones generally use accrual basis accounting for their funds. 12. Nonprofit organizations in the United States have prepared their financial statements using Financial Accounting Standards Board, FOSB, guidance since 1993. 13. The financial reporting standards are primarily contained in FOS 117 and FIN 43. 14. FOSB issued a major update in 2016 that changed reporting net assets from three primary categories to two categories, restricted and unrestricted funds, and how these are represented on financial statements. 15. Nonprofit and governments use the same four standard financial statements as profit-making organizations. In the United States, there may also be a separate statement of functional expenses which distributes each expense of the organization into amounts related to the organization's various functions. These functions are segregated into two broad categories: program services and supporting services. Program services are the mission-related activities performed by the organization. Non-program supporting services include the costs of fundraising events, management and general administration. 20. This is a required section of the Form 990 that is an annual informational return required by the Internal Revenue Service for nonprofit organizations. 21.